Joining us on that call, Morgan Stanley's Benjamin Swinburne. Ben, it's always great to see you. Good morning.
Good morning. Thanks for having me.
I want to get to Spot in particular, but can you begin by giving us the backdrop on where you think the ad market is headed, and is it slowing faster than you expected? This journal piece today interviewing the likes of Hershey, where they say, what's the point, basically, in advertising if our goods aren't going to be on the shelf?
Yeah, no, it's a big topic, especially as we head into the holidays here, which is the biggest part of the year from an advertising perspective. There's no question supply chain risk exists, particularly for those who sell goods. I think in general, though, the ad market is overall quite strong. We expect the ad market in the United States this year to grow almost 30%. But there are pockets, and they could be big, around goods and particularly performance ads. Think about bottom of funnel advertising, where there probably is some risk around the holidays relative to the expectations we've had. I do think, per your last conversation, we've seen a lot of that price in the stocks. And there are parts of the ad market, particularly top of funnel brand, and think of things like sports betting, that are incredibly strong. So I think there will be companies that will actually have a pretty good fourth quarter when we think about advertising, despite all the supply chain noise.
And I guess that leads us to Spot, which I assume your interest is piqued because they are leaning so heavy into that part of the business.
Yeah, I think there's two key points to make on how we think Spotify can outperform from here. You know, the first is they need to accelerate their user growth. They had a tremendous year in 2020. This year's been a little slower, but we think with a more mobile consumer, going back to work, going to the gym, commuting, plus music being released because artists can tour, will drive engagement, and that adds up. And then second, to our last conversation, is really around advertising. They had a really strong quarter last week when they reported. Podcasting is a huge part of that. And it's so critical for Spotify because it's a source of gross margin expansion. And I think because podcasting is so new and also, frankly, small today, it's going to power right through all of the macro issues we were just talking about.
Yeah, Ben, there was so much talk on the call about podcasting and about how that's really what's driving the growth and also enabling them to avoid some of these other issues, such as the broader ad pullback. But I'm wondering how much of your thesis on Spotify is about this company becoming more than just a music company, and how much video plays into that as well.
Yeah, it's absolutely key. I mean, music is a great business in that the market has already largely transitioned to streaming. So if we think about it and compare it to video, music is much further along in the evolution to streaming. But for Spotify, you know, the margins on music are only going to be so good. They're in the, call it 60 cents on the dollar, going back to rights holders like the music label. So they've got to build businesses on top of that. And I think the really good news this year, which frankly got masked in all of the MAU noise this year, has been that they've started to do that. Podcasting is one, and the other is Marketplace, which is really about building a kind of B2B business with labels and artists to help promote their business. I think video plays a role, but I think podcasting and the services side of the business are where we're really seeing traction right now.
Hey, Ben, it's John Fort. Good morning. Is it fair to think of the troubles in the digital ad market right now in terms of supply and demand also, that it's not a demand problem where there's a fall off in demand for digital advertising, but rather the supply of inventory that you can target in a meaningful and predictable way has dropped, and maybe that's why we've seen Apple's search ad share in the App Store rise, because companies are trying to find other methods. Because, I mean, if that's what's going on, then we should expect, as companies adopt new tools, new methods, that this should shift over the next couple quarters, right?
Yeah, I mean, I think what has made investing in sort of this whole space over the course of the last 2 years so tricky is it's so hard to know what's a secular trend versus COVID related, which is including the supply chain stuff. And I think if you think about last year's fourth quarter, it was one of the strongest quarters, for the consumer and e-commerce and performance marketing ever. And we're lapping that. And so to your point, as we move into 22, things will normalize. And I think for advertising companies that play and all over the funnel, top and bottom, you'll see these things normalize as we move into 22.